and see about what.
Hi, good morning. It's Tuesday morning. It's Carrie Sparks of Pioneer Title, your Arizona title gal. I can be reached at 602-715-5704. Every Tuesday, we do Ask the Underwriter with Brian Reeve from Barrett Financial. And so I've got some announcements, of course. I'm super excited to be moving these daily videos off of my personal page and over to my professional page. So if you have not liked Carrie Sparks, Arizona Title Gal, please go over there and like it so you can stay informed on what we're doing going forward. I've got a really awesome class being taught next week. It will not be held on live anywhere. It's going to be a Zoom meeting with Steve Black. Steve is a nationally known social media coach, business coach, and that is on July 14th. It has no cost to it on Zoom, so price is right, location is convenient. But that's next Tuesday, July 14th at 1 o'clock. But every Tuesday, again, we talk with Brian Reese from Barrett Financial. You want to introduce yourself, give your contact information, licensing, and your website.
Awesome. Thank you, Carrie. Website is www.bkreeve.com. Phone number is 602-741-4801. And my NMLS is 694300. And I'm Brian Reeve with Barrett Financial here in Gilbert, Arizona.
Pretty simple. Exactly. We were talking before I went on here to talk about what pain point is in the marketplace right now, at least in the Southeast Valley. And I got to believe it is existing in many parts of the state, as well as anybody who's listening to this that's outside of the state of Arizona. Is the market is hot. When the restrictions went back, people went out and they started looking at homes, multiple offers, actually crazy offers, and bidding wars inside of the area, at least in the Southeast Valley here. But looking at what that pain point is people are dealing with contingency offers.
Right.
And that issue of the bridge loan has come out again. So Brian and I decided that we'd kind of go over bridge loans and the pain points of the market right now. Take it from there, Brian.
Awesome. Thank you. One of the biggest things we're seeing right now is cash out refinances. And the reason is because inventory is low. So a lot of times people are going in over asking. People see the market and where the values are going. People are with COVID are staying home bored with nothing better to do than just do home improvements. I'm doing the same. And they're realizing, hey, if I get my house to a turnkey position and I just hang on to it for a little bit, what's my house going to be worth in 4 or 5 months from now if inventory is even lower? So everybody's taking this time to not necessarily list their house, but they're taking this time to get cash out at a very low interest rate and do all their home improvements. Example, I had a customer up the street who basically was on a $100,000 loan amount. It was actually a couple neighborhoods over, but it was on a $100,000 loan amount. And on a $100,000 loan amount, at his interest rate, I was able to refinance him, get him $70,000 cash out, basically new paint, new roof, new landscaping, everything done, including a pool installed for what his current mortgage payment is. So just that different swing in interest rate and where people are tapping out their equity, and he's added so much equity just into his house alone by doing all these improvements, it was almost a no-brainer. So basically he's put his house in a better position where if he wants to go sell it 4 or 5 months down the road. So I think what we're going to see right now is we have a lot of reduced inventory. A lot of people are not selling, but everybody's improving their houses. And I think when we start to see houses start to hit the market here in the future months, a lot of these houses are going to be updated. It's going to be
when it comes to let's just say I'm a homeowner here, which I am in Gilbert, and I would like to change which home I'm in because of whatever is just I'd like to shelter in place if it ever happens again in a different property.
Right.
But I am holding back putting my home on the market because I don't know if I can actually get an accepted offer on the home that I'd like.
Right.
Going back to what the bridge loan is a little bit, because I know you've got different products that you work with.
So in addition to the cash out refinance, that's another hot one. The ones right now is it's hard to get into a contract with contingencies. So the main reason people usually have contingencies is because they can't qualify with both payments, right? Now, if they can qualify with both payments, you still have a contingency because they got to use the equity from the current house in their sale to put down on the new one. However, if we have a customer that can qualify with both payments and they have the equity, then we can do bridge loans and then we can remove the contingency off of the offer. So basically, we're just essentially tapping the equity, doing a little short-term financing on their equity on their current home, and they're basically we're putting that down as the down payment on the new house. And then basically with that, we can remove the contingency and we could possibly get into an offer that otherwise would be passed up with just us doing a bridge loan.
Nice.
So there, and to get the details of that, you'd have to contact me and I could go through all of that. But we have a really aggressive bridge program that will allow somebody to tap their resources on their existing equity and then put it down on the new house. So there's a lot of ways to kind of skin this cat when it comes to pre-quals and being competitive. I mean, we've talked about escalation clauses. We've talked about bridge loans. There's a lot of ways that we can be creative with pre-quals and also qualification to put our customers in a better position to be able to get accepted into contract. The other thing that's big too right now is construction loans. So because people cannot get into houses, what they're deciding is, well, let me go construct a house. The problem is with everybody going on and improving their houses, it's hard to find the work. It's hard to find the contractors that are able to come out and do the work. You're on a long waiting list. So some people are finding private home builders that can do this or someone that can work and start getting these done. And they already have the workers available that they use. The other one is when you are contracting it out yourself. So most construction loans, you run into an issue with self-build is what we call it. So a lot of the new construction will eliminate or not allow a customer to self-build. However, I do have construction products that will allow a self-build. You typically in the thought process is why don't we allow somebody to self-build? The reason we don't allow someone to self-build is most likely they will undercut their bids because they're saving themselves money, right? But if something was to happen to them and the bank has to come in and hire a different company to come in to finish the construction for the collateral, well, guess what? The bid's now short. So that is the main reason why they don't allow that. So those products are very unique to have an owner builder, and I do have those products. So there's a lot of ways to get people still in houses right now with this current market, in a lot of ways to still work with customers and make things happen.
Yeah, I hadn't heard about bridge loans in a long time, but I was glad that this morning we were talking that you were bringing it up because it hadn't dawned on me to start looking at bridge loans and having that be a hot topic of today with the market. Like I mentioned a couple weeks ago, one of my girlfriends who sells real estate in the Southeast Valley was involved in a bidding war with 51 offers on one property. You know,
Right.
the need to get creative here is really to you work with someone who understands and is almost like an architect of, you know, their financial mortgage piece to really listen to somebody, hear what their dreams are, what their goals are, and be able to put a plan together to achieve and help them and guide them down the path.
Well, one thing is that I think people, when they think about, can I just get money to put it down in the house? I think everyone's go-to is equity. Let me just go get an equity loan. Let me go get an equity loan. Problem is with liquidity and where we're at in this marketplace right now, equities have taken a retraction. So their qualifying parameters are higher. The loan to values have been dialed back some, and they're a little bit harder to qualify for now. And your interest rate's going to be higher. So, you know, a lot of it is going to be prime plus whatever the margin is, whether it's a negative or a positive. And that's how the HELOCs are ran. And then you have what we call a closed-end second, which is it's basically a fixed rate for 30 years. And you can't draw on them. Once you get the initial draw, you're done. But the thing with these is that bridge loans tend to be, in a lot of situations, a better option than an equity. And it might be able to do something better for you in transferring that over. And I offer equities too. So if I have somebody that says, hey, look, I want to get a home equity line, I don't want to get a bridge, I can look at their options and put them side by side and say, you know, it makes more sense for you to do a bridge, it makes more sense for you to do an equity loan, it makes more sense for you to do, you know, maybe a first and a second combo. Like there's many ways. Every customer, and I cannot stress enough, every customer is unique in their own fashion. Every customer has their own prescription.
That's so true. Well, Brian, thank you again. I know that you're incredibly busy, and so I appreciate your time. And for everyone watching, thank you for taking a couple minutes to watch Ask the Underwriter. And a reminder again, next week, it's all moving over to the professional page, and you can always find all these videos over on my YouTube channel, as well as many of the other social media platforms, including Instagram, Twitter, you name it, it's kind of there. So I appreciate everyone. Again, this is Carrie Sparks, your Arizona Title Gal. I can be reached at 602-715-5704. If you do not have a current relationship with anyone at Pioneer Title, I'd love for you to give me a call, reach out to me, and we'll go from there. And we'll see you next week back on my professional page. Any closing remarks, Brian?
No.
All right.
Barrett Financial, 602-741-4801.
All right, everyone have a great day. Appreciate you all.